Are you tired of fake YouTube gurus flaunting excessive and unrealistic results, showcasing lavish lifestyles and peddling get-rich-quick schemes? If yes, then I'm right there with you. It's time to put an end to the charades. That's precisely why I have taken a stand, sharing my own portfolio, not for bragging rights, but to be the beacon of reason and to show transparency. My belief is that every YouTube creator in the financial realm should walk the talk by unveiling their portfolios, proving their mettle, and ditching the smoke and mirror act. What's up, strangers? Welcome to Wealth Game Nation. My name is Vedo and I'm here to help you better understand the wealth game and become part of Wealth Game Nation. You know the drill. No flashy illusions, no empty promises, and no fancy spreadsheets nor gimmicks. As you can see, this is my brokerage account. But before we dive into the specifics, I gotta make one thing crystal clear. I may have an opinion on stocks and the stock market, but it is still only an opinion and not financial advice. So don't you go investing based on my blabbering. This is all for educational entertainment purposes only, and when it comes to investing, no matter what anybody says or does, you've gotta do your own research. Back to my brokerage account, as you can see, the current balance is around 92,000 euros. I have 18 different investments, 14 of those are in individual companies and 4 are ETFs. So when I click here and expand, go down and order by market value, we can see those 4 ETFs are. First is the S&P 500 healthcare sector, basically flat with a couple of percentages up. Then we have the nasdaq 100 by a couple of percentages down. Then I have an ETF in the semiconductor industry. This is, by the way, the industry in which I work. Last but not least, I'm 20% down on the nasdaq next generation. Overall, we can see that I'm around 1.2 thousand euros down on my investments in the ETF. The reason for this is I bought those ETFs once in 2021 when everything in the stock market was overvalued, everything was hyped up, and that happened to be the time when I started investing in the stock market. I have bought all these 4 ETFs once and never touched them again. If we go back and look at the individual companies I'm invested in, we go down here and order them by market share, we can see that my biggest position is Nvidia. Total market value of my investment in Nvidia is around 12,800 euros with around 5,700 plus, or around 81%. When I click on Nvidia and expand, we can see that I bought Nvidia also in 2021 at the peak, and we can see how much in dividends Nvidia paid me, which is nothing. I'm not buying this because of the dividends. And then what are my total fees? The total fees are so high because every time I buy something in addition, I have to pay additional fees. So I bought Nvidia 3 times, once for 5,000 euros in December of 2021, and then end of 2022 when the stock market was down a lot, when the tech sector has been battered badly, I have doubled down and added 2,000 more to Nvidia to get a better dollar cost average. I've been holding on to it since I started investing, and I plan to hold on it for the long term. As mentioned before, I work in the semiconductor industry and I'd like to think that I know a thing or two about it. Next position is Meta. Basically, I had some extra cash in 2021. I have deployed almost everything into the stock market in 2021, which turned out not to be the best thing as everything was overpriced and overvalued. But as they say, hindsight is 2020. So I invested around 5,000 euros also in 2021. And then when the market went down, end of 2022, I added an additional 3,000. That's how my position is right now. Around 8,700 euros with around 900 euros in profits, or 11%. Next one is Tesla with a market value of 6,400, also around 500 in profits, or 8%. Here the same thing. I bought in 2021 around 5,000 and then later added an additional 1,000 in 2022. Next company in my portfolio is Apple. Apple is also part of my portfolio since 2021. I did once a purchase of Apple for 5,000 euros and I have never touched it again. The reason for this is that Apple never went that low as the other companies in my portfolio, and I never did dollar cost average after the initial purchase. Here I'm up around 1,300 euros or 26%. Next one is Alphabet. I have invested around 6,000 euros in Alphabet and currently I'm down around 100 euros or 1.5%. Same story here, bought in 2021 and then bought one additional 1,000 at the end of 2022. Next one is Microsoft, similar to Apple, bought it once for 5,000 euros in 2021 and never touched it again. As my other companies who have been down more, I chose to invest and dollar cost average in those more than to invest in Microsoft. Here I'm around 770 euros in profit or around 15%. Next one is Waste Management. The market value of Waste Management is around 5,140 euros with 200 euros in profit or 4%. Same story with Waste Management. I bought it once and never touched it again. Same thing with Airbnb. I bought it once in 2021 and has been in my portfolio ever since. The current market value is around 4,300 euros or 700 euros in minus, which is equal 40% in minus. Next one is Home Depot. Same story, bought in 21, never touched it again. Value is 4,200 with around 600 euros in minus or 12%. Next one is Autodesk with 4,000 euros in market value with around 860 euros in unrealized losses or around 18% in minus. Next one is Amazon. Amazon I actually bought twice, once in 2022 at the beginning of 2022 and once at the end of 2022 in order to get a better cost average. As you can see, it's pretty flat. Next one in my portfolio is PayPal. As you can see, the current market value is around 2,800 euros with around 1,100 euros in unrealized losses or 28% minus. PayPal is a little bit different story for my portfolio. I thought PayPal is an overvalued stock at some point in the past. Then as the stock kept selling off, I kept adding to it. So far I have bought around 4 times 1,000 euros of PayPal. This is not necessarily a company that I plan to hold in my portfolio long term. This is for me basically a value play, or as Peter Lynch would call it, a turnaround, as I believe this company has been sold off massively and it's currently way under the intrinsic value of PayPal. So once PayPal gets to a fair value, I plan on selling this company. Next one is Alibaba, very similar to PayPal. I don't think I'm going to be holding this company for the long term, especially when the company splits into 6 different companies. I don't want to keep up with 6 different Chinese companies. The reason why I bought Alibaba in the first place is I thought Alibaba is undervalued and I basically bought twice 1,000 euros of Alibaba. Current market value is around 1,800 euros with 157 euros in minus or 8% down. Last but not least is Salesforce. Current market value of Salesforce is around 1,800 euros and it's pretty much flat for me. In the bottom line, we can see that I'm up around 5,800 on my stock investments. If I go back and then go back to the overall overview where the total portfolio is shown and I scroll down, we can see that overall I'm up around 4,600 when we subtract the unrealized loss from the ETFs and we add the unrealized profits of the individual companies. In August, I have done only one trade. Basically, I have added more of PayPal after they reported earnings. I made a full video on PayPal's earnings and I believe PayPal is still undervalued. We can see here that at the beginning of August, I bought 900 euros worth of PayPal. Now the question is, how did my portfolio fare against the rest of the stock market? Since my portfolio shows only the profit and losses and doesn't show more data like the daily or monthly performances, I have created a replica of my portfolio in Google Finance. So this is the replica of my portfolio in Google Finance. We can see for the last month that my portfolio is down around 4.5%. The S&P 500 is down around 4% and the nasdaq is down around 5%. So comparing my portfolio to the S&P 500 and the nasdaq, I fall somewhere in the middle. My goal for my portfolio for the long term is to beat the S&P 500. However, I want to minimize the volatility in my portfolio when, for example, comparing to an nasdaq 100. That's the goal. Let's see how it will go. Next thing, we can look at my portfolio by year to date. Year to date, we can see that my portfolio is up 42%, where the S&P 500 is up 15% and nasdaq is up around 37%. My theory why my portfolio has been outperforming this year the S&P 500 and the nasdaq 100 is twofold. First, I invest a lot in tech companies. The reason why I'm currently investing in tech companies is because I believe I'm relatively young and I believe that the best returns is going to come over the next years from the tech sector. I love dividend investing. However, I live in Austria where the rules for dividend investing are not optimal. For example, if I get $20 from waste management, $7 or $8 are transaction fees and then another $7 or $8 are taxes. In Austria, there's no way to do the dividend reinvestment plan. So basically to go around the taxes and invest the money right away, I am forced to cash that money out. That money has to leave my brokerage account and goes to my checkings account. So I end up with $4 or $5 in dividends compared to $20 payout from waste management, for example. That's why I'm not investing currently into dividend paying companies. But eventually, when I'm older, I think I will move to more dividend paying companies. The second reason why I believe my portfolio has performed better than the rest of the market is I am investing in blue chip stocks which are usually trading at a higher valuations. My belief is similar to the Warren Buffett's, where he says it's better to pay a fair price for a great company rather than a great price for a fair company. So that's why all the companies I'm investing in are usually trading at a higher valuation. But I believe in the long term, those are great companies and they will outperform the stock market. By doing this, I believe I have minimized the volatility in my portfolio. But that's just a working theory and we will see how it plays out. So there we have it. That was an unfiltered view of my total stock portfolio and the performance so far. I want to reiterate once again that my goal in sharing my portfolio is not to show off or make anybody feel bad about their own investments. Instead, I hope that my transparency will shed some light into the reality of investing. Whether you're just getting started or you're a seasoned investor, there's always more to learn and new opportunities to explore. And that's it for today. Thank you for joining me. If you found this video helpful, please hit that like button. Don't forget to subscribe and share, and let me know down below in the comments what you think about my portfolio composition. Thanks so much for watching. I hope you enjoyed it, and I will see you in my next video.